Order blocks are most commonly used for entries and take profit areas, but there are some rules that I personally have for identifying high quality order blocks. And if you stay until the end of this video, you'll be able to identify the right ones. Step one, identifying structure. Determining structure should be easy. And if you need a little bit of assistance, head up to where your time frames are and select the line chart. This could be really helpful in determining structure if you are having a hard time. Now, determining structure is fairly easy. Is this an uptrend or is this a downtrend? We're using US30 for this particular demonstration. So on my line chart, what I want to see is higher highs and higher lows forming, meaning that we are creating new highs, but we are not coming down, breaking the previous lows. So then we have a bit of higher highs, higher lows, and then we have this pullback here. This low is not lower than the previous low here. So the uptrend continues. So now we have a new low, right, which is a swing low, and we create a new high. This high is higher than the previous high, and we don't want to see a low come down past the previous low, if that makes any sense, right? So long story short, guys, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This determines structure. Step 3, identifying liquidity. Starting from the higher time frame, preferably the monthly and down, you want to identify liquidity. These are previous highs, previous lows, also areas of imbalance. Imbalanced candles look like this. This is when there are no bodies of candles or wicks in front, directly in front, or directly behind the candle. Price targets these areas. As you can see, it first targets the previous high. Then it comes down to fill in the imbalance. And then it eventually targets the previous low. So depending on the direction of price, you'll know to target either the high or the low. These are also called buy side and sell side liquidity sweeps. Once you've determined the trend of the market, whether that be an uptrend or downtrend, you'll know which kind of order blocks to look for, bullish or bearish. So in this case, this is an uptrend. So what I'm doing is I'm looking for a bullish order block. This means that my order blocks are going to look like this. And when price comes back down rather than up, I'll take my opportunity up. These are called bullish order blocks. So the best order blocks are the ones where we have candles that break structure, such as this one. They have a little bit of imbalance or a lot in this case. And we focus our attention on these breaks of structures, imbalance areas. From the bottom of this wick to the top of that wick, this is imbalance. And beneath that imbalance candle that broke the previous structure, you'll find an order block, which is here. So when you find your order block, you'll place your stop loss safely beneath the OB, just like that. And you'll be targeting the previous high, such as this one. And you want to make sure that your setup is at least a 3-to-1. So we'll move the stop loss up just a little bit. And you want to make sure it's at least a 3-to-1. So we have a 3-to-1 setup. We're targeting the previous high. We had a break of structure candle. Beneath that break of structure candle, there was imbalance left over as well as a bullish order block. We wait for our entry, we take it to the previous high right here. There are some order blocks that you don't want to pay attention to. And by the way, guys, you're not going to always get this perfect OB, but there are some order blocks that you don't want to pay attention to. And in an uptrend, you don't want to focus on a bearish OB. You'll get in profit, but it will be short-lived. Here's a bearish order block. Price is clearly going in an uptrend, so we don't want to focus on any order blocks or supply zones that is going to take us down, because that'll be trading against the trend. As you can see, when we find a bearish order block, we normally target the previous lows. And in this case, we don't get down to the previous low. We actually go higher. So these are order blocks that you don't want to select. Next, I'm going to teach you about internal versus external OBs. If you have 4 or 5 order blocks, or maybe even 3 or 2, how do you know which order block to select? Okay, guys, determining order blocks when there are multiple order blocks are quite difficult. So I'm going to help you just a little bit to simplify the process. So here we have an area that broke structure. This is a high that's being broken right here. Also, there is imbalance that's left behind. As you can see, this candle is full of imbalance. Price eventually comes down, taps, fills in all the imbalance, but also touches the bullish order block, right? So now we have a new low that was created from this order block. And what I'm going to do is measure the swing high and swing low. This is the last push up before we started to get some rejection. And this is clearly the last push down on this time frame here and here, just to help us eliminate order blocks, right? So in the top section of this swing high and swing low, this is a premium area. Premium. This is where price is expensive. And then the bottom part, excuse me, of the area is a discounted area. This is where price is cheap, discounted. So when we are buying, because this is a bullish setup, when we are buying, we want to get price at a discounted area rather than premium. Never buy in premium. You're buying at a really expensive price. An example that I love to use is when you go shopping, you look for the deals. When you're buying anything, whether that be a currency or indice, you want to get a discount or deal. So in this setup, we have 1, 2, and 3 areas of order blocks, right? One being here. And I'm marking them green because these are bullish OBs. We're not focused. Remember, in an uptrend, we're not going to focus on bearish order blocks at all. So we have another order block here. And then we have a final OB right here. So one order block is automatically disqualified because it is in premium. We're automatically going to disqualify this OB, and then we're left with 2 order blocks. Both of these OBs have broken structure and also left behind imbalance, as you can see here. So this is another area where we have an institutional candle that broke structure and also left behind imbalance. Now, I'm going to say this. This is where it gets really tricky. Both of them have the confirmation that we're looking for. They are both in discounted areas. They both have broken structure and they both have left behind imbalance. But guys, if there's an OB, right, and then there's imbalance beneath it, always go for the bottom order block. Price may come and temporarily reject from this area, but eventually, guys, it will go down to the bottom order block, right? This is a deeper discount, which is better for us. This is right at the swing low. And also there is no liquidity beneath this this OB. So I like this one. Let's just see how it plays out. I have not back tested. Let's just check it out. Okay. So price does go down for the bottom order block, which is also in discount. And this trade has not finished yet, but this was a really nice setup. This order block is also disqualified because it's internal, right? So at the swing low and at the swing high, those are external OBs, but anything in between the swing low and the swing high, is called internal. This means that there's a really high chance that you'll be stopped out of this order block. So I like to mark my internal OBs as gray because they are at a high chance of being stopped out. External at the swing low, everything in between, internal. So this OB and this one as well is an internal order block. Price did come down and reject from it, but as you can see, it did not make it to taking out the previous high. And it lets us know that price wants to come beneath these two internal OBs down to the swing low, which is perfect for us because we get a deeper discount.